good years, 3%. This year, maybe 4.5%. Less wiggle room for official spending because we exhausted our stimulus spending money. Government cannot continue to spend the way it's been spending in case it gets downgraded by the international credit rating agencies. So they have to keep an eye out on the total amount of debt outstanding. So the disguised government spending through the PFI will probably take its place. Government will call that some other name, but it'll still be spending. Okay. Monetary easing for Malaysia is still possible because we kept our interest rates quite high. We didn't lower it to zero like many central banks around the world. So further monetary easing is possible. We will probably see the government try to reduce its deficit by raising taxes. I think we are already seeing rumblings of that. The subsidies were being withdrawn, and therefore for consumers it will mean rising housing and total leverage. In this kind of environment, we had been a little bit defensive. In the previous year, this would have been the typical portfolio. We had some defensive stock holdings which gave us very lower than average market returns. But we also have some holdings that are very strong, gave us very strong, more than 100% return. This provide the alpha, the outperforming portion of the portfolio. On the average, the returns are a little bit above average. What do we propose for at least maybe a quarter ahead? Some investments into a diverse portfolio of stocks in various, along the lines of various team plays. We suggest a little bit of exposure to yields. Yields can probably be extracted out of investment into a REIT. Our favorite one at this point is Atrium REIT. The yield is sustainable, we think at about 10%. Decent. And it also gives you a little bit of capital gains as well. So you get yields plus some capital gains, very decent from Atrium REIT. TSM Global. This is actually a former, for some of you who've been in the stock market some time, this is a former Juan Kwang. It makes wire harnesses for the motor vehicles. It gives you a small yield, 2.2%, but it's very cheap on PE terms, 5.6 times PE. The stock is in a very gradual uptrend. Stock price, not too expensive, 2.2 ringgit 29 cents. We also like Paramount Corporation amongst the property development stocks. It's probably one of the better ones. PE is very low at 6 times, and the yield is, well, it's lower than market average, but the stock is in a continuous uptrend. Okay. For consumer play, we like Kurnia and Zulian. Zulian is multi-level marketing. The best I can label this is it's the next high O perhaps. It makes a fair bit of money at 82 million for the last financial year. 1 ringgit 87 cent. PE is still very cheap, 6.9 times, and gives a very decent dividend yield of 6.4%. Kurnia Asia is a recovery play on the motor sector again. 75.5 cent, decent PER of 9.8 times. Didn't pay dividends last year because it was still recovering from a loss in 2008 because it had to make very substantial provision on instructions from Bank Negara. This is to boost its capital position, its provisioning position. Because of that, it suffered a loss and it didn't pay dividends in 2008. But in 2009, in the second half of the year, there's been a very strong recovery. I expect this company to swing all the way back to about 1 ringgit. So this is a recovery play. Faber, GLC linked company, price is still quite low, PE is reasonable, yields not so great, but I think it's not too bad. You can get at least some dividends, and the stock is in a very pronounced uptrend. For manufacturing, we like a small company, not very liquid, well-called holdings, 1 ringgit 39 cent. Again, this is related to the motor sector. It makes rubber hoses for the radiators, the water system, cooling system for cars. 11.6 times PE, 5% dividend yield, decent yields. And for a bit of play on oil and gas, our preference is Sapura Crest, 2 ringgit 48.7. PE is a little high, 17.9 times, but that's typically the case for oil and gas companies. PEs are high, and the yields are not terrific. But this is one of the preferred holdings in the sector. Okay? So these are our short to medium-term recommendations for this quarter at least. This is a technical picture from our technical analyst. He thinks the market's got upside to about it will try and breach the 1344 gap here, which occurred during the bear market in 2008, and it will therefore try to reach 1436 in the longer term. Okay? I think this is a plot of the stochastics. It's climbing. It will probably climb for some time, maybe into the middle of this year, according to his interpretation of trends. Stocks that he likes, our technical analyst likes Proton, again, motor sector. He thinks that the stock will try and climb to about 5 ringgit 20 cent, which is the upper side of this triangle breakout. Support at 4 ringgit. He also likes Korea Asia. Oh, looks like we agreed on this point. Korea Asia also. Stochastics, just on the upswing, it will probably stage a breakout from this downward pointing speed resistance. Upside target about 88 cent. Bintai Kinden, this stock staged a fabulous run for the last couple of weeks. 98 cent price target. At close yesterday was 69 cent. Again, on stochastics, it's climbing. It will reach overbought level in approximately at 98 cent. Okay, sorry, I ran over my time slot.